In this video, I am going to do the technical analysis of Dow Jones Industrial Average Index for the week commencing from November 22nd, 2021. This analysis will be in two parts. First, I will do it on the weekly chart and then I will do it on the daily chart. So this way we will be able to get the most accurate results here. This is the weekly chart and these are the weekly candles. If you see that these last two candles are the bearish candle. Um, if you remember last week, I told you, let me show you this. So this is the technical analysis of the last week. So I told you that 36,110 is the critical price here for Dow Jones. So if this index, if it closes above on 2 consecutive days, then buy. And if it closes below 36,110 on 2 consecutive days, then sell. Okay, and this is how it worked here on this chart. This is weekly. Let me change the time. This is the time frame. Okay, now if you see here, this is November 12th and this is November 15th, Monday. So on Monday it closed below 36,110. On Tuesday it closed above 36,110, means there was no trade here on Monday and Tuesday. Then on Wednesday it closed below 36,110 and also on Thursday it closed below 36,110. So these two candles. Okay, so in my technical analysis last week I told you whenever there would be two consecutive candles, the closing of two consecutive candles, okay, this side below 36,110, which means you are going to sell. And here you can see that this is what happened on Friday. Okay, so this was the point where means you were supposed to trade and it was a safe trade, means you could have made a lot of money here, and particularly in options, and it was the expiry day. It was November 19th. It was the expiry day. Okay, so there was like 400 to 500% profit within a day here on for this November 19th in put options of Dow Jones Industrial Average Index. Okay, so this was exactly as predicted. Anyways, uh, let's get back to our chart. Okay, so we are going to analyze like what is expected to happen in the coming week. Okay, in the week of November 22nd. Fine. So this is the weekly chart and these are the weekly candles. Okay, and on this sorry, this last candle, it's a heavy bearish candle. Okay, and again one more thing. In the same video, okay, through this stock RSI and MACD, I told you that stock RSI and MACD are perfect bearish, which means most likely Dow Jones will fall and it will fall below 36,110. So that was another reason why Dow Jones it came down, and it came down heavily then. Okay, particularly on Friday it was clear because there were two consecutive candles. Okay, they closed below 36,110. So this candle, okay, a very heavy bearish candle. Now if you see a moving average here, this candle is trying to hit this moving average. This moving average is at 35,445. Okay, but this is means this moving average is not the only problem for the market, means not exactly the problem. Okay, but market is basically look, there are these two things. One is the moving average and second one is this the trend line. Okay, so moving average and the trend line. So market is most likely to hit because this the week has closed. Now next week whenever market comes, this is the price. This is the price. This price is 35,637, 35,630. This price is 35,630. Okay, this is where the market will hit the moving average on the weekly chart, but it will be more clear on the daily chart, means this exact price it will be more clear on the daily chart because these the trend lines, okay, they work on the daily charts, not on means not perfectly on the weekly charts. So the market is supposed to come down to hit this the trend line, and also it will try to hit this moving average. So this moving average is expected to move up a bit higher, or it will remain here. So it is 35,445, so it may be 35,500, approximately 35,500. Okay, so market is expected to meet this moving average and this trend line here around 35,500 or 35,490 or 480, and thereafter we can expect a reversal in the market. Okay, but this thing will be more clear on the daily chart. So we will cover the daily chart after this, the weekly chart. Okay, fair enough. Now the interpretation of the candle. Okay, as usual. So we are now going to interpret this this candle. This is the weekly chart. Okay, this is a heavy bearish candle. So the formation of a heavy bearish candle is an indicator that the next candle, next weekly candle that is going to form here, it will be bearish in nature, or or the market may first come down and then there may be a rebound. Okay, which means if a bull candle is supposed to form, then that bull candle will be something like this one. Okay, a long wick and then a U-turn, a rebound, and then the formation like this. Okay, and one more thing here that is very interesting. If market on the daily chart, if it breaks the trend line, in that case market is expected to come around like 35,000. Okay, so we will get the exact number on the daily chart. Anyway, so this was the interpretation of the bearish candle. Now the technical analysis here. Okay, so technical analysis, if you see this, the Bollinger Band, market hit the Bollinger Band and market is still above the median of the Bollinger Band, which means the market is still bullish. Remember, market is still bullish. Now there is one more thing that we need to consider. If you see, this was the high that Dow Jones, okay, it made on means in the week of November 9, August 9 or August 16th. Okay, so this high was formed and it was 35,631, and the market has already come below. Okay, market has already breached the high of these two candles, which means most likely market is not going below, but market is going to take a U-turn. Okay, because here it's a confluence zone, okay, it's a confluence price. So market has already breached this price. Now at most market may respect this moving average on the weekly chart, and thereafter we are expecting a rebound. And if there will not be a rebound, in that case expect some good fall in the market. Okay, anyway, so we were doing this technical analysis here. So through the Bollinger Band, market is bullish, but now it is weak bull. It is weak bullish, not bullish like this one. It is now weak bullish. Then through moving averages, there is a clear fan out. Market is bullish. Okay, through Ichimoku, market is still bullish. Now, if we look into these parameters, sorry, these other technical indicators, okay, and these technical indicators here, if we see these technical indicators, okay, so MACD is now bearish. MACD is bearish. Stock RSI is also bearish. Okay, both MACD and stock RSI are bearish on the weekly chart, and that's not a good news for the market. Okay, now if you see divergence, so divergence is normal. Divergence has come down here at this point. Okay, here the divergence was high, and that was the reason why the market it came down. Now the RSI, the momentum is declining, means there was this bull momentum. Okay, that was this momentum was growing up in favor of bulls, but now that is declining. Okay, so through all of the technical indicators on the weekly chart, it is not clear whether market is bullish or market is bearish. The reason is that moving averages, okay, Ichimoku and Bollinger Band, they are saying market is bullish, but our these other technical indicators, which is stock RSI and the MACD, okay, and also if we look into this, this was the very heavy support. This was the very heavy support but now this is going to act as resistance for the market. So market has already breached the support. Okay, so MACD, stock RSI, and this support, and these are saying that market is bearish. Okay, so now let's move on to the daily chart to see like what exactly is about to happen in Dow Jones. Okay, and what are these, particular these parameters, and also what is that particular price on the trend line that market is about to hit, okay, in order to rebound. Okay, we are here on the daily chart. This is the daily chart and these are the daily candles. Let me write it down. This is the daily chart. Okay, and these are the daily candles. Okay, so this is the daily chart. Okay, and these are the daily candles. One candle represents one day. So like I told you in the beginning of the video that as per the last previous technical analysis, okay, for the last week, that was November 15th, I guess, November 15th. Yep, that was for November 15th. Okay, I told you that this one is 36,110, 36,110, and this is the decisive price for the market if there are two consecutive candles, okay, that are closing below 36,110, then we will sell, and here you can see the result. Okay, this was the day you were supposed to make money, a lot of money, and on this day there was only one candle that closed above 36,110, but there was no second candle. And if there would have been, another candle, okay, that would have closed above 36,110, in that case you were supposed to buy and the price was supposed to move here. Okay, anyways, on the weekly chart I told you that there is this we have this trend line here. Okay, but now yes, we can, because there we have, this the bearish candle, or this very very heavy bearish candle, which means that the next candle that is going to form, most likely it will be a bearish candle, or there will be a gap down opening, or if there will be a gap up opening, then first the market will come down. Only if there will be a gap up opening, then first the market will come down, and then it will try to hit this trend line, and as soon as it hits the trend line, it is most likely to rebound. Okay, and this is how the trend line works. So market was moving up, then it came down, and most likely after hitting the trend line, it is supposed to take a u-turn, a rebound here. Okay, and the second scenario, the second case is if market sees a gap down opening below the trend line. See, on Monday, okay, the price is 35,585. Okay, so this particular price, the trend line price is 35,585, 35,585. So this is going to act as very very strong support. But if on Monday, if the market says a gap down opening below 35,585, then expect a very sharp, this downfall in the Dow Jones. Okay, so the market will come down heavily, very very heavily, only if, remember, only if the market opens below 35,585 on Monday. So market closed around 35,600 on Friday, and so this is the condition. If there's the gap down opening below 35,585, then okay, means below 35,585, okay, you are going to sell, and sell heavily. Okay, or if you're trading in options, then buy puts. Okay, so within a day you will see 200 100 to 200% profit here in puts. Okay, and see, this is the condition only if, remember, only if market opens below 35,585. Okay, and now in the other case, in the other scenario, okay, if the market sees an opening, maybe a gap down or gap up opening, but above 35,585, in that case you are going to buy. So let me remove this thing here. Let me write it down so that you can remember. Okay, so last week it was 36,110, and this week it is 35,585. Okay, so if market opens above 35,585 or some other gap up opening, and if market comes down, hits this trend line, then it will rebound. So anything above 35,585 you are going to buy. Okay, so above you are going to buy above 35,585. Now there is one more thing. It's not just about Monday. Okay, we have Tuesday, Wednesday, Thursday, then we have Thanksgiving. It is on, I guess, Thursday or Friday. Okay, so whenever market closes below this particular trend line, okay, whether it's Tuesday, whether it's Wednesday, whether it's Friday, I guess, because Thursday it's Thanksgiving. So Friday. Okay. So if any of these days, if the market closes below this trend line, then which means the market is coming down. Okay. So this trend line is going to support the market in the bull trend. Okay. And one more thing, whenever market moves up, see, whenever market moves up, this moving average, this red moving average, it will come down here. Okay, so market is most likely to meet this moving average on Monday or on Tuesday. So Monday or Tuesday. Okay, so maybe it is maybe Monday or Tuesday. So either Monday or Tuesday, market is expected to hit this particular trend line. Okay, sorry, this particular moving average, which is at 35,940. Whenever market hits 35,940, okay, that is the time you sell, provided you are seeing a downtrend in the market. Okay, and provided that market has not hit this trend line, then only you are going to sell as soon as it hits 30 this 35,940, sorry, 35,960 or 97, sorry, 35,930 or 920 it will be on Monday or Tuesday. Okay, so this is how you are going to trade in Dow Jones. Okay, now if we do the technical analysis here, so we have this the Bollinger Band, upper band, and then the market closed below the median of the Bollinger Band. Okay, and we have lower band of the Bollinger Band. So market is now in between the median and the lower band, which means through Bollinger Band market is bearish. Okay, market is bearish through moving averages, because market has closed below all of these moving averages, and it is now heading to this another moving average. Anyway, so it has closed below these moving averages, market is bearish. Okay, through Ichimoku, yes, only through Ichimoku market is bullish, because market has not crossed this the Ichimoku. Now if we look into other parameters here, other technical indicators here, we have MACD. Okay, it is a clear bearish, clear, very, very clear. It is bearish because MACD is less than signal, and there is very heavy or very significant, difference between MACD and signal. So it is bearish. Now stock RSI. So stock RSI, see, it is absolute zero. Means the K channel is absolute zero. Okay, D channel is 0.23, I guess, or 8.23. 8.23 D channel. Okay, so stock RSI is heavily bearish, heavily bearish. Then we have divergence. No, divergence is normal. Momentum, yes, momentum is now building up in favor of bears. Okay, so all of the technical indicators on on this daily chart, okay, except this the Ichimoku, they are saying that there is a bear trend in the Dow Jones Industrial Average Index. Okay, so I have told you this about the setup. So see, it all depends on the trend line here, this price 35,585, and also on the weekly chart there we have a moving average, okay, around this price 35,500 or 35,480 or 490. If somehow market crosses 35,585, then it will hit that 35,480 or 490 on the weekly chart, that moving average, and that will be again means a point where the market may think of taking a U-turn. And other than that, we have support and resistance. Sorry, I forgot to tell you about this. So we have very critical resistance here. It is at 36,565. The high of this candle, it is 35,565. 35,565. Okay, this is very heavy resistance. Then just above this 36,650 is the critical resistance. Okay, then we have this very okay, now earlier it was support, but now it is resistance. It is 36,110. 36,110. Now it is a strong resistance here because of the formation of this the confluence zone, and because of this. Then we have again, it was support, but now it is resistance. It is 35,700. It is 35,700. Okay, 35,700. And then we have very heavy support at 35,585. Other than that, there is an intermediate support. Okay, because of this the confluence zone, and it will lie around 35,350. Okay, so this confluence zone will come into the picture, and it will be sorry, what was that? It was 35,300 to 35,350. Okay, it is 35,350. Okay, so it is 35,350. So these are the support and resistances. Okay, so just and this is the critical part. This is the trend line. So everything will be defined by this trend line, and particularly on Monday. Okay, not on Tuesday, but on Monday itself, you will see some movement in the market, means some decisive movement in the market, and most probably market is going to hit this trend line, or there are chances that if on Monday the Asian and European market, okay, if they come down, then for sure market will open below 35,585, and everything will fall, everything will come down. Okay, okay guys, so I have given the link to the spreadsheet, the Discord spreadsheet, okay, in the description of the video and also in the comment section, so you can take a look, and you can ask me any questions if you have. And I have also provided the links to my programs, options trading strategies program, how to trade in options, the options trading strategies, in the link. Okay, in the links that are so these links are provided in the description of the video. Okay, you can take a look. So guys, this was my technical analysis for Dow Jones Industrial Average Index for the week commencing from November 22nd, 2021.